Before we get into this breakdown, I want to give a quick shout out to Benjamin Eisenhower for asking a really solid question on a previous video. You asked for all ISX sectors to be broken down and for a follow-up on which positions are structurally strong and which ones are weak. That's an important question because it forces us to stop guessing and start looking at how the Iraq Stock Exchange is actually built. I'm Amira Blake, and today I want to walk you through what's really happening inside the Iraq Stock Exchange. Not rumors, not hype, but the real structure of the market. Because once you understand which ISX sectors are strong, which ones are weak, and why they're positioned that way, you stop reacting emotionally and you start thinking like institutions. Let me paint the picture. Right now, the Iraq Stock Exchange is not a balanced market. It's a concentrated market. That means a small number of sectors dominate most of the trading activity, liquidity, and investor attention. At the center of the entire ISX is the banking sector. Banks dominate the Iraqi market in a way most people don't fully appreciate. On most trading weeks, banking alone accounts for roughly 40 to 50% of total trading value. In some weeks, it goes even higher. That tells us something critical. Liquidity lives here. And where liquidity lives, institutions pay attention. Banks like Bank of Baghdad, National Bank of Iraq, Mansour Bank, and others are not just stocks. They are infrastructure. They sit directly in the path of Iraq's reforms. Payment systems, compliance upgrades, capital increases, clearing and settlement improvements, and future foreign participation. Ask yourself this: if Iraq wants foreign investment to flow in, which sector has to work first? Exactly. Right behind banking, we see a rotating group of sectors that trade for second place: telecommunications, industry, and hotels and tourism. Telecommunications, led by AsiaCell, plays a stabilizing role. Telecom stocks don't usually explode higher, but they generate predictable cash flow. That's why you often see telecom volume increase during uncertain weeks. Investors park money there when they want stability, not speculation. Industry behaves differently. Industrial stocks tend to wake up when reconstruction money starts moving. Infrastructure projects, construction materials, manufacturing, logistics. When industrial volume increases, it's often a sign that money is positioning ahead of real economic activity, not after headlines are released. Hotels and tourism might surprise some people. When this sector heats up, it usually reflects confidence. Improvements in security, regional travel, visa policies, or government messaging around tourism can all show up here early. This sector doesn't lead reforms, but it reacts quickly when sentiment improves. Now let's talk about the weaker sectors. And this is just as important. Agriculture, services, insurance, and investment companies sit at the bottom of the ISX structure. These sectors trade lightly. Some days, they barely trade at all. That doesn't mean they're bad companies. It means they're illiquid. Illiquidity is dangerous if you don't understand it. Prices can move sharply on very little money. Gains can look exciting on paper, but exits can be difficult. These are not the sectors institutions rush into first. They come later, after the system is working smoothly. Here's the part most retail investors miss. The ISX does not move evenly. Money flows in layers. First, banks, then telecom and industry, then tourism. Only later do smaller sectors start to catch sustained interest. So if you're waiting for everything to move at once, you're already behind the curve. Let me ask you a serious investor question. If Iraq is upgrading its banking laws, compliance standards, clearing and settlement systems, and foreign investor access, where does capital have to concentrate first? That's not speculation. That's structure. Now imagine this, and I want to be clear, this is speculative. Imagine if foreign access improves, settlement becomes smoother, and confidence increases. Imagine if even a small amount of global frontier market capital reallocates into Iraq. That money won't scatter randomly. It will go where liquidity already exists. That's why understanding sector dominance isn't optional. It's foundational. Here's the fast recap. Banking is the backbone. Telecommunications provide stability. Industry signals early growth. Tourism reflects confidence. Smaller sectors lag until liquidity expands. If you're a foreign investor, think in layers, not lottery tickets. If you're a local investor, watch where volume lives, not just price. And if you want to think like a billionaire, follow structure, not noise. If this breakdown helped you see the ISX more clearly, like the video, share it, subscribe, and click the notification bell so you don't miss future updates. Drop your questions in the comments, especially if you want a deeper breakdown of a specific bank or sector, and I'll respond with a follow-up video. I'm Amira Blake, and as always, this content is not financial advice. I'm not a financial professional or an insider trader, and nothing here should be taken as a recommendation. This is for informational and educational purposes only. Until next time, stay observant, stay patient, and stay ahead of the crowd.